Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. Today in this particular video, we will be discussing about secured and unsecured advances, and we will be also discussing what are the various securities against which advances and loans are generally given by the banks. So let us start. First of all, you should be clear regarding what is secured loan and what is, you may say, an unsecured loan. So, dear students, kindly keep in mind what is the meaning of secured loan. That means some security is there. That means a loan that is having some security. It has been given by the bank after taking into account, after accepting some security from you. So, in other words, we may say that a loan that is secured with something. Primary security may be there, and then some collateral may be asked, maybe bank may say that should be given, and it will be very useful to recover the amount in case the money is not given back by the borrower. So in case some default in the payment is there, in that case that security will be sold by the bank, and bank will be secured to some extent. That is why these types of loans are known as secured loans. So you may say that the security, the collateral that is basically given, it acts as the backup of the loan. Back of the loan, it is basically that. Now, what is unsecured loan? I think it will be clear to you that a loan that is not secured by, a loan that is, in that case, no security is there, a loan that is granted by the banks, a loan that is granted by any financial institution, but no backing is there, no physical securities, no primary, no collateral, nothing is there. So in case no security is there, in that case the loan will be unsecured loan. It may be the case when securities are there, but such securities are not acceptable to the bank, or such securities are not, you may say, credit worthy. It is basically known as unsecured loan. And as far as the difference between secured loan and unsecured loan is concerned, kindly keep in mind that secured loan are not risky. Risk is not out there, but very low risk is there, as you have some cushion, you have some backup. But on the other hand, unsecured loans are very risky, very risky. In case the borrower fails to pay the money, fails to pay the principal, the interest, you have nothing, you have no physical security, no primary security, no collateral security. So it will be very risky for a bank in case of unsecured loan. That is why the interest rate in case of unsecured loan is much more than the, you may say, than the other category, that is secured loans. And as far as unsecured loans are concerned, these are generally issued, these are generally given to the persons of very good credit rating, of having very good track record, very good past experience, and who are having some source of steady income that seems to be enough to repay the loan along with the interest. So whenever the bank feels that these things are there, person is of very good track record, his credit rating is very good, and he is dealing in sub business, he is dealing in the activity having steady income that is sufficient to repay the loan. So in such cases only, the banks are generally giving the unsecured loans to the people. So it should be kept in mind. Now, what are the general principles of secured advances? Various principles are there. These must be kept in mind while giving, while allowing, while advancing the secured loans. First is adequacy of the margin. Margin should be adequate. I think it is very much clear to you that in case something is being given, something is given by the borrower to the bank, so some margin should be kept in mind. It should be adequate. It should be adequate. Then the second is the security should be marketable. It means it should be saleable. It should be free from any kind of encumbrances. So in case the money is not paid back by the borrower, bank is free to sell it in the market. Proper documentation should be there. A registered deed should be taken. It should be verified. Realization of advance should be there. Its value should be ascertainable. Security should be such that we are able to ascertain its actual value, and its value should not be subject to a heavy fluctuation. Otherwise, what may be there, when we have accepted the security, its value may be very high, but due to market fluctuations, due to market ups and downs, now its value is has reduced to very low level, and it is insufficient to cover the amount of the loan. So in order to save ourselves from such things, banks should study in detail, and banks should study, and it should keep the value of the security in a proper way. And then securities are freely transferable. It should also be kept in mind by that. Now I will be discussing with you various types of securities. I will be discussing against which banks generally give credit. They generally give advances. So these are advancing against goods, advancing against life insurance policies, advances against shares and debentures, advancing against real estate, advancing against documents of title to goods, similarly advancing against term deposit or FDs, FDRs, advancing against book debts, and then advancing against jewelry, that is gold, silver, etc. Gold, silver ornaments. Now let us discuss these one by one. Now, dear students, the first kind of security against which generally banks give credit, that is goods. Goods, against goods, banks are basically giving the advances. Now, in order to meet the working capital of the large number of companies or business organizations, banks may give credit against goods. And it is considered to be a better security, as goods are there and companies dealing in those goods. But it should be kept in mind that prices of these goods are stable. I have just told you that it is free from very high ups and downs, very high level of fluctuations. And these kinds of goods, these kinds of commodities that bank has accepted as security in order to advance money to the business, these types of goods and commodities can be sold, can be liquidated more easily. It is very easy to sell such securities. And then bankers generally give short duration advances to the customers to their against goods. Generally, no long term advances are given against goods, being a type of working capital, being a kind of working capital item. So, banks generally provide advance against goods for a for a, you may say, not very, for a short period. It is not given for a long period. What are the basic precautions that must be kept in mind by the banks while giving advances against goods? So I have listed a few points. Kindly keep these in mind. First is, customer should be trustworthy, and the commodity is such that its demand is there in the market. And first of all, the bank should also be having knowledge of the commodity market. Proper valuation should be done, and we should ensure, the banker should ensure that proper insurance of the goods is there, and proper delivery of the goods is there before giving the advance. Actually, delivery is there, and the goods should be properly placed, and goods should not be perishable. Otherwise, goods will be of no use to the banks. And as I have already told you in the previous slide, goods are easily saleable, easily marketable. Goods are not obsolete, and goods possess a price that is ascertainable. In case you are not able to ascertain the price of the goods, it will not be useful. And we are able to handle it, we are able to transport it in an effective way. So this should be kept in mind. Now the second category is advances against documents of title to goods. So what is there? Kindly note that what are the title to goods? Goods are transferred, goods are, you may say, transferred by one person to another. So some document is there, some, you may say, documents are transferable by endorsement. Documents are also transferable by delivery. And you should kindly keep in mind that transfer of the document can take delivery of the goods in his own right. Transferee of the goods. Like I have sold you the goods, I have passed on the document of title to goods to you. So the transfer will be able to take delivery of the goods in his own right. The examples of such documents of title to goods may be bill of lading may be there, dock warrant may be there, warehouse keeper's certificate may be there, and similarly railway receipt and various other type of documents of title to goods may be there. Now, what are the merits or what are the pros, and similarly what are the demerits or cons of advances against documents of title to goods? So first of all, let us have a look on merits. What are the benefits? In case advance is given against a document of title to goods, it will be a good security. You will be secured, something is there. The loan will become secured, it will not be unsecured. And secondly, the person in possession of the document can transfer the goods by endorsement, or he can do so by delivery. The documents are easily transferable, and formalities involved, these are no doubt, formalities are there, but these are the least, these are the minimum. Now, what are the demerits? Fraud may be there, dishonesty may be there, real documents may not be given, actual fake documents may be used, forged documents, altered documents may be used. Similarly, unpaid vendor, they may exercise their right of stoppage in transit. Goods have moved from the main point of seller, but they have not reached the point of, you may say, place of buyer. They have left the place of seller, but they have not yet reached the place of buyer. So in between, unpaid vendor may exercise his or her right of stoppage of goods in the transit. No, it will not be in the favor of the bank. Various legal issues emerge. Then, advancing against stock exchange securities. What is stock exchange? What are the securities that are there in stock exchange? And you might also be, I think, aware that SEBI is there. Securities and Exchange Board of India is there, that is regulating the stock exchange transactions. So we will be talking in this part about shares. So shares may be given, shares may be given to the banks, and banks may advance the loan, they may give some advance against such shares. So first thing that I would like to say, that this type of advance should be for productive purpose only. So banks must not give amount, the advance, the loan, for speculative purpose. So the purpose of the loan, purpose of the advance, the loan for the, you may say, borrower, the purpose should be productive purpose. It should not be speculative purpose. And banks may also provide credit facility to the stockbrokers and market makers on the basis of their commercial judgment within the policy framework that has been approved by their respective boards. And banks may also provide finance to the companies to help employees to buy shares of their own companies under ESOPs. I think you are clear, it is employees stock option plans. So it may also be given for that. Then advances against land and buildings. Now, I think it is clear what is land and building, and almost every company is having its own land, its own building. So it is there, and it is, you may say, secure also, because Surface Act 2002, Surface Act 2002, it empowers bank to sell the immovable property taken as mortgage without intervention of the court, after observing the formalities that have been mentioned, that have been prescribed in the Surface Act 2002. So it is very beneficial, and after the, you may say, enactment of the Surface Act, it has reduced the problems, the issues to the bare minimum. It has really facilitated the process. But one thing bank should keep in mind, that before accepting the land and buildings as security, borrower's title, the title to the borrower, that must be verified. That must be examined in detail. The services of some lawyer should be taken in case bank is having its own legal department. So that lawyer must verify the title of the borrower to the property. So and it should be ensured that the person in whose name the property stands, he or she is having a good, valid, subsisting, and marketable title over the property, and no encumbrances are there. That means nothing of some sort of encumbrances is there, and there is no litigation, there is no attachment from any statutory authority, from any court in India. And one thing more should be kept in mind, that is banks should be having proper valuation of the property, and it should be kept in mind like proper margin is there, and the valuation should be done, it must be conservative, realistic, and should be on the forced sale basis. But then in case land is being given as security and it is the leasehold, the land is on lease, so in that case it is necessary to ascertain whether it is there in the terms of the lease, the borrower may assign or borrower may transfer by way of mortgage the leasehold rights in that particular piece of land. So it should be verified from the lease deed, and it is very clearly written in the lease deed. And secondly, we should also keep in mind, bank must also try to ensure that the repayment of the loan by the borrower, it should not extend beyond the date of the lease, beyond the period of the lease. It should also be ensured, otherwise the terms and conditions must be amended accordingly. And then proper inspection of land, proper inspection of a building should be done. Banks should ensure that security is very good, it is in existence, and they may also get some inquiry, they may also get some idea from independent sources in order to satisfy the ownership of the property. Now then after that, banks are also giving advances against LIC, that is life insurance policies. It may be by LIC, Life Insurance Corporation, or any other company. So these are also accepted as primary or collateral security, and advance may be given by the banks against such insurance policy. But what is to be kept in mind? What are the various precautions? Let me explain. First is, the policy should be the original one. It should be duly stamped. It should be duly signed by the issuing authority. And when you are accepting the life insurance policy, in order to pay, in order to provide the advance, that policy must be in force on that particular date. And proper premium, all the premium that have been become due before that, all the premiums have been paid by the borrower. And one thing more, that is very important in insurance contracts, that insurable interest should be there, and it should be verified. It should be verified at the time of advancing the money to the borrower. Then in case of life insurance policies, we should prefer endowment policies. Various types of policies are there. It may be term insurance plan, it may be money back insurance plan, it may be whole life insurance plan, it may be endowment plan, or it may be group insurance policy. So preference should be given by the banks to endowment policies because of its various merits. No restrictive clause should be there. Policy should be free from restrictive clause. Proper margin of the surrender value of the policy should be kept, so it should also be kept in mind. And proper assignment should be obtained by the bank. This assignment on the policy, or it may be taken on the policy, or it may be taken on a separate paper that is duly stamped and signed. So when we will be doing this kind of things, the earlier nomination, if any, that will be automatically cancelled, otherwise issues may arise in future. And in the event of the death, let us suppose Mr. A has given you the policy, his life insurance policy, and you have advanced some money to Mr. A against that policy. And now suppose Mr. A dies, In that case, what will happen? In that case, the assignee will become entitled to receive the amount, policy amount, and when the advance is repaid, the policy has to be reassigned in favor of the policyholder. So it should be kept in mind. Then advances against real estate. Again, I am telling that under real estate, buildings may be there, house may be there. So again, it is the category of immovable property. You should keep in mind that title is proper, no encumbrances are there. So it is properly unencumbered, no prior charge is there, and you are the proper owner of the property. A registered deed is there, and banks should also try to keep sufficient margin of the value of the property. And various things should be kept in mind, like in case it is necessary to get it insured. So bank should be verifying that it is properly insured by borrower. Now, advances against book debts. I think book debts, you know it very well. Book debts means basically debtors. It also includes bill receivables or simply account receivables or debtors to whom the company has sold goods on credit. So, first of all, while advancing the money against book debts, the bank should ensure that the borrower is a good person, his integrity is beyond doubt, and these book debts have been charged by way of assignment or by way of hypothecation by the borrower. And it should also be kept in mind that proper records, proper books are being kept by the borrower and proper auditing is there. And what is the age of the book debts? That should also be verified. That should also be verified, and proper margin should be maintained. And in order to avoid any fake bill, in order to avoid any fake entry, the banker may try to, you may say, verify sales invoice and debtor ledger in order to know the exact position. The debtor is there because of some sale, because of some genuine trade transaction. So it should not be fake, it should not be ghost buyer. No such thing is there. It has arisen out of the genuine trade transaction. That is, proper sale was there and it was on credit. That is why debtor is there. And proper assignment should be there. Proper assignment should be there in favor of the bank. It should be in written form, it should be in black and white, it should be signed by the transferor or his authorized agent, and clear cut intention should be there. It should be to shift the debt to the assignee, and once it is complete, after that all the rights and remedies of the transfer, they will be transferred. So it should be kept in mind, it should be all rights and remedies will be with the bank, with the transferee. And in case some sort of default is there, so the bank will be starting proceedings in his own name without obtaining the consent of the borrower. So in case the borrower is paying the money in time, interest is paid in time, principal is paid in time, in that case there will be no need to do such things. But in case he is not paying, so in that case, the banks will be starting proceedings against the borrower even without obtaining his consent. Now, advances against FDRs. You see, sometimes FDRs are there, fixed deposit receipts are there. We may advance some money against the security of those FDRs. And in this case, kindly note that FDs issued by the same banks, that is the safest security for granting the advance. Now that is basically that FD has been issued by your own bank only, and it denotes a debt due from the banker himself. So it should be kept in mind. No such restriction is there, but banks should avoid granting an advance on the security of some FDR of another bank. So as that bank will be having proper lien over this kind of FDR. One thing more that should be kept in mind by the bank while advancing money against FDRs, that the amount of loan, that the advance should be given to the person in whose name FDRs are there. So in case FDR is in the name of Mr. Ram, so in that case bank should try to give loan only to Mr. Ram. In case some joint FD is there, in case some joint FDR is there, and if they all of, let us suppose only one of them wants a loan, so in that case what should be there? It may be given, but after getting letter of authority from all the joint holders, from all the depositors. So they will be giving a letter of authority, they will be authorizing the bank to sanction the loan to one of them on the basis of this FDR that is in name of all of them. So without getting a letter of authority from all of them, the banks will not be issuing the advance. They will not be giving the loan to the party, single person. And banks should take signatures of all the depositors. In case, let us suppose three depositors are there. So first of all, bank should take a letter of authority from all before sanctioning the loan to any one of them. And then the bank should also take the signatures of everyone, all the three depositors, and that should be taken across a revenue stamp, and a memorandum of pledge should also be taken from all of them. But one thing more I will like to say, that in case FDR is in the name of minor, in that case special precautions should be taken by the banks before advancing, before giving the loan to the party, to the borrower. Then comes advances against jewelry, advances against gold or silver ornaments. So it is also possible banks may advance money, banks may give loan against such gold, silver jewelry, such gold or silver ornaments. They may give, but in case a loan is given, in case advance is given against such securities, it may be given for agriculture purpose, it may be given for non-agriculture purpose also. But it should be kept in mind that it should not be given for speculative purpose. So what is the proper purpose? What is the specific purpose for which the advance is being taken, loan is being taken? That should be written, that should be recorded, that should be there on the loan application. So it should be kept in mind. And one thing more, be it gold, be it silver, you should note that the amount of loan will depend upon its market value. And in case of gold, it will be depending upon what is the purity level of the gold. So you should keep in mind that no mistake is there while making valuation of these types of ornaments, and proper margin should be kept. Proper margin should be kept, as there might be some ups and downs, some valuation changes may be there. So fluctuations may occur. So it should be kept in mind. And when the loan has been given back, now no amount is pending from the borrower, then after that these ornaments, these jewelry, gold, silver ornaments, these will be returned back to the borrower. So it is, but in case the borrower is unable to repay, he is not paying the interest, he is not paying the repaying the loan, in that case bank is free to sell these ornaments, sell these gold, silver ornaments, or sell this jewelry in an auction or in a private sale. But before doing that, they must give the reasonable notice to the borrower. And after giving him the notice, reasonable notice, only after that they may move further. And in case, let us suppose, if in order to make such sale, in order to give some, you may say, advertisement, in case some cost is there, so such a cost, such expenses may also be recovered by the bank from the borrower. So it should be kept in mind. And in case still some amount is there, so that may be refunded, that may be returned by the bank to the borrower. And right of general lien will be there even after the closure of the loan. even after the closure of the loan, in case some other overdue loan is there in the name of same borrower. So in that case, bank may not return these jewelry to the person. So they may also remind him, the borrower, about the other loan that has also become overdue. So the right of general lien is also there, and it can be exercised by the banks. So dear students, it was all from my side as far as secured loans, unsecured loans, or advances are concerned. And I have also discussed in very simple language what are the various advances against various securities. So we had also already discussed what type of precautions should be taken by the banks while making loans, while making advances to the borrower. Okay then, thank you.